I'm not sure if you've seen this chart before, but what this shows you is Bitcoin's price and global M2 money supply. So the basically the money that's in the system. The thing that I want you to focus on here is how when M2 money supply, which is the white line, when it increases, so does Bitcoin's price. You can see that here, the orange in the background. Bitcoin's price goes up when the M2 money supply goes up. So the M2 money supply is the amount of money that's in the system, the amount of money that's been created and added to the system. So if we take a look at these lines, of course, there's a pretty great correlation, but I think that there's something that's missing here. The amount of money in the system doesn't have to keep rising for Bitcoin's price to keep increasing. And I want to explain to you what I mean by this by showing you the example of some other assets. So one of the main problems with assuming that this will continue to be in line is that we're assuming that the US dollar will continue to be the only form of money that exists. So if the US dollar, the supply of the US dollar increases in the system, then that's the only way for Bitcoin's price to go up. But right now, there are other forms of money being used. And what I mean by this is that we're using houses as money. We're using index funds as money. Think about how many people buy index funds every single week, just blindly, because they think of it as a savings vehicle. They think that it's a way for them to protect their wealth for 10, 20, 30, 50 years into the future. They just assume that the S&P 500 is at $6,000 today, and it will be at $7,000, $8,000, $10,000, $20,000 in the future. So what they do is they put as much money into the S&P 500 as they can, and they keep putting money into it. They use it as a savings vehicle. The issue with people just blindly buying the S&P 500 is that the multiples just go crazy. So let's say a company like Apple, we see here, Apple's stock price is at $254.63. Their PE ratio is 41.86 times. PE ratio is the price to earnings ratio. This is a metric that allows you to value a stock by dividing the company's share price by how much earnings it has per share. So what you get is a multiple. So let's say, for example, with Apple, it's at 42. So if you put money into Apple, it's going to take them 42 years to make your money back. To me, that's ridiculous. That doesn't even make any sense. So the more people who put money into Apple's stock, the higher this number goes. Because what you're doing when you're buying stocks is you're increasing the demand and you're decreasing the supply, meaning that obviously the price has to go up. So the number of people who want to buy that stock keep going up, and the number of people who want to hold on to it just hold on to it. They just keep holding it. Another way to look at this is to look at the average price to earnings ratio for the S&P 500. So from 1971 to 2017, it was 19.4 times. This is from a website called ValueScope. The median PE ratio was 17.7 times. Right now, the PE ratio of the S&P 500 is 30.09. If we take a look at this chart from the same website here, we can see that the number has just completely blown out of proportion, and maybe we go into a period where it drops. But where does all that money go? I don't think people are just going to want to hold US dollars. I don't think they're going to be okay with dealing with that inflation. They used to buy gold. So they used to move all of their money from, let's say, the S&P 500. They'd move it from the risk on asset to the risk off asset, which was gold. So at the time, people saw gold as something that's going to consistently store its value because it's an atom. Gold is just an atom, a clump of atoms, basically, a clump of molecules. But gold doesn't change. Gold stays the same no matter what. It's always held its purchasing power. So what people try to do is when the price to earnings ratio of the S&P 500 goes high, they convert that into the safe haven, the hedge, and then they wait for the S&P 500's PE ratio to come down. What that means is, of course, that gold's value goes up, gold's price goes up. I think, the way that I see it, this cycle is a little bit different because more and more people are seeing Bitcoin as that safe haven now. They're seeing it as the way to save for the future because Bitcoin doesn't change. Bitcoin is the only thing that we know for a fact that there will be 21 million of. We don't know that there will be a fixed supply of anything else. Gold, for example. There are countries that are finding deposits of gold that we've never expected. I don't know how accurate they are. For example, China said that they found $80 billion worth of gold or something like that. El Salvador said they found $3 trillion worth of gold. I don't exactly know what the numbers were there, but the point here is that the supply of gold can increase at any time. And if gold's price increases too much, then more gold will come to the market. People will be willing to sell their gold and it'll suppress the price again. The way that I see it, all of that demand for using gold as a store of value is going to move to Bitcoin. It's going to move away from gold as that safe haven asset to Bitcoin. And then we went to the S&P 500 before, so from the S&P 500 to Bitcoin. What's happening here is that more and more people are seeing the S&P 500 as that safe haven, and it's not supposed to be. People who are investing are supposed to lose money sometimes. They're not supposed to always just make profits and profits and profits. That's not how it works. What we're doing today is money is being added to the economy to allow these companies to go into more and more debt. I'm not saying that the S&P 500 is going to collapse. I'm not saying that. I have no idea. I don't know what's going to happen. What I do think, though, is that over time, people are going to move their money from the S&P 500 into Bitcoin as a savings vehicle because Bitcoin doesn't change. The S&P 500 has a lot of risks associated with it that Bitcoin doesn't. Bitcoin is a savings tool. The S&P 500 is an investment. The good thing, though, here is that if the S&P 500 survives this, let's say there are still stocks that are, well, let's say the S&P 500 still exists and we see that a lot of the companies have, let's say, a Bitcoin strategic reserve and they just outperform everybody and they massively increase their market cap. What we're going to see is that the S&P 500's returns are going to increase massively. So if we look at the PE ratio today, the price is going so much higher because more and more people are seeing it as a safe haven asset. Over time, when people no longer see it as a safe haven asset and they invest money that they're willing to lose into the S&P 500 and then they put everything else into Bitcoin, we're going to see that the price to earnings ratio is going to drop because demand for the S&P 500 is going to decrease. It's going to become a much more attractive asset. So if the S&P 500's PE ratio drops to 19.9, that would be a much more appropriate price. If we take a look at the PE ratio here, the record low is 5.31. The median value is 17.92. My point here is that right now it's extremely high. Maybe it can still keep going higher. I don't know. I don't know if it'll just keep going higher. Who knows? Maybe there's never a recession. Maybe people never figure out how Bitcoin works. Keep in mind, I could be wrong here. I'm just going based on game theory. This is what I think is going to happen. As Bitcoin's price increases, more and more people are going to see it and they're going to want to participate. More and more companies are going to want to participate. Over time, if they don't participate, they're going to lose. And of course, I'd like to show you the priced in Bitcoin 21 website. So the S&P 500, just to illustrate my point here, has lost something like 99.9% of its value in terms of Bitcoin. I know Bitcoin started off at zero. I get it. I'm not saying that the return will continue to be 100% every single year for Bitcoin. I don't think that's going to happen. I do think, though, at some point, Bitcoin will be so big that people will see it as a safe haven. I think people will replace the S&P 500 with Bitcoin. Right now, like I said, the S&P 500 is a safe haven. It's where people put their money because they have no other way of doing it. They could hold US dollars, but they know that US dollars are going to lose value regardless of what happens. No matter what happens, the US dollar is going to lose value. Whether the economy is good, whether the economy is bad, the US dollar is always going to lose purchasing power over time. If you want to buy regular things, if you just want to pay for the things that you use to consume in your life, in terms of US dollars, everything will always get more expensive. If you look at the S&P 500 in terms of Bitcoin, the S&P 500 has done nothing but lose. At one point, one share of the S&P 500 was worth 496 Bitcoin. Today it's worth 5% of a Bitcoin. At this point, the S&P 500 was at $1,200 in US dollars. And today, I think this is pretty outdated, the numbers for the S&P 500, but today it's around $6,000. And today it's 0.05 Bitcoin. So the number keeps going up in US dollars, but it keeps dropping in terms of Bitcoin. And it'll continue to drop in terms of Bitcoin because the demand for Bitcoin is infinite, but the supply is finite. The demand for Bitcoin is never going to be fulfilled. People will always want more Bitcoin, so they'll produce goods and services. Today, they're using their US dollars to exchange for Bitcoin. At some point, I think at some point they'll directly be able to trade their S&P 500 shares for Bitcoin. I think that's going to happen. I don't know for a fact. I'm thinking through this as I make this video, but I think over time they're going to be able to probably sell their shares directly for Bitcoin. I think the S&P 500 will trade in Bitcoin. But the main takeaway here should be that over time, value is going to be moved from the S&P 500 to Bitcoin by people who don't see the S&P 500 as worth it anymore. If we go back to the price to earnings ratio, these ratios are really important in predicting what's going to happen in the future. We can take a look at this picture here. Every time the number goes too high above the ratio, I think it's a sign of too much money printing, money being added to the system. And every time it goes too high above, eventually it drops below the average again. Who knows if this will ever happen again? I'm just trying to show you a trend of what could happen. But we can see that every time the world goes through a recession, for example, 2009, when we had the biggest recession of all of history, pretty much the global recession, the price of gold went from $638 all the way up to $1,900. And that's a very big move compared to past moves. We can see here that 1976, this was a time of massive inflation. The money went into gold. There we can see that big change here. It went from $115 an ounce all the way up to $865 an ounce. We can also see the same thing is starting to happen here. I don't know how high the price of gold will go, but if the price does go too high, there's a very strong chance that more supply comes to the market, because keep in mind that most of the people who are buying gold aren't even using it. They're just keeping it in their safes, in their vaults, and they're just holding on to it, expecting that it's going to maintain its value over time. They're speculating that people will want gold 20, 30, 40 years into the future as a savings vehicle. But because Bitcoin has all of the characteristics of gold, I think gold will be demonetized. There are some rumors, and I saw that Michael Saylor mentioned it. I saw that Cynthia Lummis mentioned it. They were saying that the US should sell its gold in terms of certificates to buy more Bitcoin because they want to accumulate as much Bitcoin as they can. And what this is going to do is it's going to automatically make gold less valuable as a store of value, because we know that the US government has a ton of gold. They have a lot of gold that can come into the market. If they start selling gold, it's going to make the price of gold drop like crazy. It's going to drop like a brick. So those are two things that could happen that will probably not make this chart play out. I don't know if it's accurate. I don't know if this is where things are going. I actually think that the 2025 entire year is going to be really great for Bitcoin. I think Bitcoin has fundamentally changed. Maybe I'm wrong here, but I think Bitcoin has fundamentally changed because more companies are buying as much Bitcoin as they can. They're borrowing money to buy Bitcoin. But there's a third factor here that could make it so that this trend doesn't play out anymore. And that third factor is housing. I have to show you this chart in as many videos as I can because it just proves my point so well. We can see here that if we turn in these numbers into Bitcoin, we can see at one point, one house was 64,000 Bitcoin. Today, a house costs 4.52 Bitcoin. If you had a property portfolio of 10 houses, let's say in 2023, those 10 houses would have been worth 125 Bitcoin. Today, those same 10 houses are worth 45 Bitcoin. And this number is going to keep decreasing. The reason why I'm even talking about last year versus this year is because last year is when the Bitcoin ETFs were announced, and in January this year is when they were approved. In that time, since the ETFs were approved, the price of a house has dropped by over 60% in terms of Bitcoin, and it'll keep dropping. We're going to see this number drop from 4.5 to 2.25, so it's going to drop 50%, then it'll drop another 50%, another 50%. It'll keep going until a house is worth less than 0.1 Bitcoin. There are real estate investors who are selling their houses, their extra rental properties, for Bitcoin. I've spoken to multiple real estate brokers, and they're telling me that people are making this decision. They're not selling their entire portfolios. That's not what I'm saying. I'm not saying that somebody who had, let's say, 100 houses is selling all 100 houses for Bitcoin. They're doing it piece by piece. They're selling one house, two houses, five houses, 10 houses. They're selling a small portion of their portfolio and putting it into Bitcoin. But the difference that this makes to the price of housing in terms of Bitcoin is huge because they're putting more supply of a product that can be created essentially at will. As long as you have the resources to produce more houses, we can produce more houses. But they're putting more of this product into the market. They're making it so that if somebody has demand for housing, they can buy a house. And there's no need for as many people to rent. So what this does is it kind of breaks the rental market. It also takes a lot of the Bitcoin out of the market, out of the economy. So if there's any Bitcoin in circulating supply, then it's being taken out of the market. The price is rising because people are buying Bitcoin. The price of housing is dropping, even in terms of US dollars at this point, because people are selling their excess houses and they're going to keep selling their excess houses. In terms of US dollars, I would say that the house prices will continue to rise over time because more and more dollars will be added to the system. But in terms of Bitcoin, this number is going to go a lot lower and people are figuring it out. So that first source where money will come into Bitcoin instead of new money being added to the economy will be stocks. The second source will be gold. And the third one will be housing. This chart, the white line, refers to the amount of money that's being added to the economy. So this is new money being added. So let's say, for example, if you take on a mortgage to buy a house, you're adding money to the economy. It actually makes sense that this number is dropping because house prices are still the same number that they were before, but interest rates haven't dropped. So house prices have to come down. If house prices don't come down and interest rates stay high, it means that fewer and fewer people will buy houses, meaning that less money is being created and added to the economy. But that doesn't mean that they're not going to buy Bitcoin. Most of the people who I know that are buying Bitcoin aren't buying Bitcoin with debt. They're not buying Bitcoin with newly created money like we see here. What they're doing is they're using their cash flows from their job to buy Bitcoin. So if they're earning money, it doesn't mean that that money has to be created out of thin air for them to buy Bitcoin with it. They can buy Bitcoin because their employer has money. Their employer is very likely making money by using their services to sell a product or to sell a service, and they're making profits from that. So what they're doing is they're using that profit from their employer and they're putting it into Bitcoin. They're taking more and more supply of Bitcoin out of the market. I think what we're going to see is that fewer and fewer people are going to give away their Bitcoin for dollars because dollars can be created out of nothing while Bitcoin can't. There's a finite supply of Bitcoin while the amount of dollars in the system can rise forever. So this number temporarily does go down. Maybe we see Bitcoin drop to the $80, $70, $60,000 level. I don't know. Maybe that could happen, but I can't guarantee it. I actually saw some comments here that showed you that this trend is kind of misleading. The correlation just fluctuates between +1 and -1. So sometimes it outperforms, Bitcoin outperforms US dollar money production, and sometimes it underperforms. So over the next 10, 20, 30 years, the best thing that you can do is just keep accumulating Bitcoin. Don't think about these trends. Don't think about whether or not the US government is going to print more money. All you need to worry about is accumulating. That's it. You can think of this as just a pyramid scheme, as a Ponzi scheme. Even if you think this thing is going to fail, buy at least a little bit because I don't think it's going to fail. I think it's going to go a lot further than most people think it will. So before you use these trends to make your trading decisions, make sure you understand the whole picture. This could completely blow our minds. I don't know how this will happen. I don't know when this could happen, but I think at some point people are going to see Bitcoin as the safe haven and they're going to move their wealth from legacy assets into Bitcoin. If this happens, then this chart doesn't matter. It doesn't matter how much money is in the system. Bitcoin could take over the entire system. All the money that's in the system could flow into Bitcoin. Bitcoin could completely break the legacy system. And all that takes is one trigger. And in my opinion, that trigger is going to be the US government saying that they're going to start a strategic Bitcoin reserve.